I wanted to introduce Jacqui, Maguire, and Elizabeth Meltz from Tacombi, who will be tag teaming this session. So Jacqui is the Vice President of People at Tacombi, and Elizabeth is the Vice President of Operations and Sustainability. And I wanted to ask them before we start to talk a little bit about their professional paths, but also how their specific roles relate to the growth of Tacombi.
Thank you, Sarah. I'm Jacqui, so I lead HR for Tacombi. Elizabeth and I, you may have heard, we're not founders, but we are part of the leadership team of a growing company. My personal path to getting here was that I actually started in restaurant operations. I pivoted my career completely to HR for tech companies, and coming to Tacombi, which is a group of taquerias, I kind of bridged those two together to lead HR for a restaurant group. Sarah and I have crossed paths in a number of different ways, both starting our careers at the same company, but also now Tacombi as a client. So Sarah has been one of our great partners in HR.
I think I have to take that from you. Hi, I'm Elizabeth. In full disclosure, I sort of roped Jacqui into doing this presentation with me because as VP of Operations and VP of HR, I feel like all of the topics of like scaling business and how we make these hard decisions and equity are decisions we make together. And sometimes, you know, I like to say we have a disagree but commit kind of attitude, which I think is really helpful. I came from restaurants. I've worked in the kitchen. Most recently, before Tacombi, I was at Diehl. And so I've done fast casual, full service, you name it.
Great, thank you. So also a little bit about my own background, because I didn't tell you anything about me. I started in restaurant operations as well. I was at Hillstone with Jacqui, and eventually decided that the people side of the business was what interested me the most, so I transitioned into training and HR for a small restaurant group here in New York City, was laid off in late 2016, and in interviewing for jobs actually discovered how many small businesses there are in our industry that don't have access to quality HR support. So I started doing it by myself. I realized very quickly that one person was not enough. Now we have a team of 20. So it's been quite a journey, and I can speak personally about growth from our company's perspective as well, which has been quite an adventure and a roller coaster with the pandemic in the middle. So just to start, I wanted to talk about what we at Empowered have observed are common challenges that businesses face related to their people as they grow. So the first thing I'll mention is that as many businesses as we've worked with, and as many different sizes and contexts, all businesses share these very common challenges. The other thing I'll say is that while not all of these challenges are obvious at the very beginning, the root of these challenges is always present at the beginning of a business's growth. So things like promoting prematurely from within, which is a really common challenge we see because small businesses, you love your early employees, you want to give them every opportunity to grow, there's a lot of loyalty there. So a common mistake that we see businesses making is promoting early employees beyond their capability, which then turns into a negative thing, frankly, for the business, but also for that employee. Another example would be resistance to change. So I think the fact that all of you are here speaks volumes to your adaptability and your interest in learning. However, when we see businesses fail, it's often because they're very attached to something that was working. And this is what we do, and this is how we do it, and we don't need to change. And that philosophy is very dangerous, particularly when it comes to people, because people are incredibly dynamic, and what people need is constantly changing as well. So if you're not keeping up with what your employees and your leadership team need to be successful, you are falling behind. And I'm sure you can attest to that as well. The other thing I'll mention is no shared vision or values. Like, to me, as someone who naturally understands kind of what motivates people in a work environment, starting a business without that driving purpose and not being able to clearly articulate that to people coming onto your team is such a huge miss. And I really would encourage all of you, if you don't already know how to articulate that, think about how to put what motivates you into words, into a mission statement or vision statement or core values. Because when new employees come through the door, particularly once you're big enough that you are not personally hiring every single person, you need to know that what drives them and what's connecting them to your business is the same thing that connects you to your business. And that continuity is incredibly important. One other thing I wanted to mention is that what you believe as the owner of your business is incredibly important, particularly how important do you feel people are within your business? And I see this all the time with our clients, right? They often hire us because they say that they want to invest in people, right? When it really boils down to it, though, whether or not they follow our advice is dictated by how much they actually value their people. And so quite often, we'll be in a situation where we provide advice to kind of help them achieve that larger goal. They may not follow that advice, and then ultimately there's a disconnect between what they've said they value and what their actions show that they value. So I would highlight each of those things. Anything else you notice or anything any of you have questions about in terms of the challenges listed up here?
I would just add that I think Irene, who was up here earlier, said, the people who got you here aren't necessarily the people who are going to get you there, which I think was what you were saying about promoting too early or too fast. And so I just wanted to highlight that.
Yeah, I think I've had conversations with both of you about this. It's one of those things that's tricky because you care so much about people as individuals, but remembering that if you are putting someone in a position they're not ready for, you're not setting them up for success either. And nobody likes to fail, right? Nobody wants to be bad at their jobs. This is the HR in me coming out. I truly believe that. Nobody wants to be bad at their job, but if we can't set someone up for success, we're doing them a disservice. So that's one that really stands out to me. And of course, all of the challenges I think that you mentioned are challenges we've experienced personally.
Yeah, thanks. Yeah, they're very real. The only other thing I did want to mention is this idea that we haven't been sued yet, so we're okay, right? So this reactive approach to risk. I would say about 40% of our 300 clients have come to us because of a lawsuit, because they weren't proactive, and now they realize how important it is. And I will tell you as a business owner how terrifying it is if you have a lawsuit that you're not prepared for. So I'm not trying to scare anybody. That's the last thing I would ever want to do. But I do want to make sure you know that there's a very real possibility, even if you have the best intentions, that a lawsuit or a government fine or an investigation could happen. And being prepared for that is really important. So whether that means having HR support, or if that means having insurance, or if that means having an attorney on speed dial, you should really think proactively about that because it's just a reality of the environment we operate in. It has nothing to do with how good any of you are as operators. It has a lot more to do with other people in the environment that you may cross paths with and what their intentions might be. Okay. So wanted to break down by growth phase key investments that you might want to think about making. And one key principle in putting this together was we want to be investing before we need that thing. So something that we see a lot along the theme of being reactive is recruiting has become a massive problem for us, so now we're going to go find an applicant tracking system. So in thinking about it proactively in these different phases, I wanted to emphasize that you can avoid the last-minute scrambling by having a more deliberate plan in terms of how you're building these systems to support your team. So things like phase 1, I think a lot of you here are in what we're calling phase 1, under 100 employees, just starting out. Think about things like, industry standard compensation. So just meet the market. You don't necessarily have to do better, but just think about not skimping when it comes to things like compensation, basic benefits. Benefits are very expensive, but to have any kind of competitive edge, having basic medical, dental, vision, and paid time off is incredibly important. HRIS with electronic onboarding. I would say almost all of our clients with under 100 employees do not have electronic onboarding, and it blows my mind. But thankfully, the pandemic awoke a lot of people to the importance of automation and the importance of being able to control processes like this remotely. So this is something that I would highly encourage you to look into. HRIS stands for Human Resources Information System. So it's like a payroll system, but it's all encompassing. So it has onboarding, benefits management, paid time off management, and other functions that support the employee lifecycle. And then finally, on-call HR or legal resource. This is so important. Every business, no matter the size, needs help in this area. You cannot be your own HR person as an owner. I own my own company. I am an HR person. I am not our HR person. That's really, really important. And I would highly encourage all of you to look into getting support in that area. Okay, fantastic. So third and final point I wanted to emphasize before we get into the discussion is how you're harnessing your data as a business leader when it comes to people specifically. So the first step here is that you need data. So you're not going to have data if you don't have something like an HRIS or an applicant tracking system or some system that's managing your processes from an employment perspective. The second is the data has to be correct and accurate and clean. So if you have an HRIS, but you're not terminating people in time, right? Most common issue we see. Garbage in, garbage out, right? So you're not learning anything from that data. So keeping that data integrity is incredibly important. So then how do you use this data? So there were really, you can go crazy with this, but I wanted to boil it down to be as simple as possible with 4 key areas that you can use data to support in your business. So one is measuring turnover. Not only how much turnover do you have, but what are the causes of turnover? What's prompting people to leave? Are they leaving voluntarily, meaning they are resigning and departing, or are they leaving involuntarily, which means you are firing them? And what is the cost of that turnover, importantly? So I know all of you are looking at your P&Ls, you're managing money closely. Do you know what turnover is costing your business, right? There are a lot of different estimates, but anywhere between $3,000 and $8,000 per employee is approximately what turnover costs you. So I'll let you do the calculation. Employee engagement is a predictor, not only of retention, but of business performance. So monitoring employee engagement, also highly recommend, how do your employees feel about their manager? How do they feel about your compensation and benefits? Total rewards, what benefits do they most value, right? Because you're going to have to make decisions as an owner about what you prioritize, and knowing what matters most to them can be incredibly helpful.
And on that point, Sarah, I would just say that the key to that is finding out what matters most to them. Don't assume because you read a bunch of surveys or whatever, or a LinkedIn article, that they want a foosball table and a coffee on draft, right? Let's find out what they really is. It maybe
that's what our employees want. That's what the survey said.
I forgot that you were sitting. But I think somebody mentioned earlier, like English classes. Actually, Adrian mentioned English classes for Spanish speakers. Like, find out what they actually want. I feel like is
I have a question for Sarah, because you touch so many companies. What are the like top 3 reasons why people leave? Just to let them know. I think I know what they are, but I want to hear you.
Yeah, top 3 reasons people leave voluntarily.
Voluntarily.
Right. So I would say a lack of career development, to me, is probably number 1. So
which Adrian mentioned earlier as well.
right.
yeah,
Adrian.
and it could be, it's
Schedule.
not only there isn't a path for me, it could be there is a path, I just didn't know about it. So communicating those opportunities is equally as important as offering them. I would say not disliking, but perhaps not feeling that their manager has their best interest at heart, right? So you can work for a fantastic company, but have a manager who you don't feel is backing you up, and that can ruin your entire employment experience. So I would say that's another one. And I think also misalignment with company values or purpose. So, going back to the very beginning and how important it is to articulate what you stand for as a company. If someone starts and perhaps how you actually are is not what you said, that can be problematic. Or if maybe your purpose changes and that person is no longer aligned, or maybe their life path takes them in another direction. So I'd say those are three pretty common. Anything else you two would say?
Well, on the last point that you made, I think that is more common than a lot of people would realize. That when you join an organization, what you have to do selling in an interview process, right? You have to sell your organization. But if you sell too much, and it's not what people experience when they join the company, they'll make decisions to move really quickly. And that's something that, not just from my time at Tacombi, but from working in HR and leading restaurants across different companies, that's one of the biggest things that I've seen that I think is a surprise. One of the ones that you didn't mention, which I think because it might not be top 3, but it's worth saying, is compensation and total rewards are a factor. We'll talk a little bit more about how having like structured compensation is a big, it's not necessarily fully transparent compensation. I know there are companies out there doing that now, of saying our wages are public, everyone could know exactly. I believe in wage bands. Every level should have a band. You should know what to expect in your band, and then nobody's going to leave for compensation because they know what to expect. There's no surprises. So there are times where I think comp and total rewards come into play, but often if people are not thinking about their compensation because they know what to expect and they're getting paid every week and they're focused on their job every day, if those other aspects that Sarah mentioned, being aligned with the mission and vision of the company, and having a manager that is listening to them and they see the career growth for them, they're not looking for other roles. So they're not going to get that offer that's a higher comp.
Okay, great. And then just 2 other areas to highlight as far as the metrics go. One is talent acquisition. So understanding how effectively you're recruiting can also be incredibly helpful, particularly when you're scaling. So when you reach that pace of rapidly opening new locations, rapidly scaling up your product, understanding what your cost per hire is, or what your offer acceptance rate is. Those are some key metrics that I would recommend looking at. And then finally, individual performance. So how many of you give kind of KPIs or targets to your team to help motivate them? Just a show of hands. Yeah, that's great. So it's a really great tool to tie their success to the success of the business. So things like managing food cost or guest reviews or average check or things like that can really help your team understand how their individual contributions relate to the business. Okay, great.
Spoiler alert, Jacqui and I are both anti-variable compensation.
We'll get into that. We'll get there. Something else I just wanted to bring up here is that the concept of key performance indicators, so KPIs, essentially, these are indicators that tell you something about your business, data-driven indicators. And so something to think about is leading indicator it predicts the future. So it tells you kind of what's coming on the horizon for your business, which is obviously very helpful. And that's something like employee engagement scores, for example, can predict rises or decreases in turnover. So that can be helpful. Lagging indicators tell you about something that's already happened in your business. So things like, food costs, things that you're probably looking at more day to day are often lagging indicators. So you're getting that information, you're reacting to it. So, it's always good to use a blend of both and really think about what's the data you're looking at that predicts the future of your business and allows you to react before that happens, if that makes sense. Okay, great. So let's get into the conversation. So I wanted to ask, just to start, what is something that you did in the early development of Tacombi that helped the company prepare for growth?
I can start, and one thing I should say, some of the reflections that we're providing, we inherited some things that were done well. Elizabeth and I both joined the team about 18 months ago. But one of the things that I think we benefited from a lot in our roles right now is that Tacombi did have very structured compensation when we joined. I may have Sarah to thank for that from early consulting with Tacombi. But our restaurant teams, our taquerias, had structured compensation for every position across the taqueria. So from our back of house, front of house, and management all had clear bands that were set. This was a structure that was put into place that now, as we've come in and had to make changes, some to adjust with the market, some, as Elizabeth insinuated, we're not fans of bonuses, and there were bonuses in there that were sort of clouding people's focus. When we switched the compensation structure, there was already a system in place, so it was easy to intentionally switch that. And I think we benefited a lot from having that structure in place because it was something we never had to clean up. Everybody had fair, equitable compensation at our taquerias from day one. And that's something that I think can't be understated how helpful that was as we scaled the business.
I made a note to make sure you say that people should always know what they're being paid to do the thing.
I say this to our teams all the time. People should always know what they're being paid, when they're being paid, and how they're being paid without having to think about it. If we are focused on, am I getting this bonus, am I not getting this bonus? Will my paycheck show up? Is it going to be this much next month or is it going to be that much next month? You're thinking about your compensation and not thinking about your job and your goals. And so the most we can do to eliminate clouding all of that and just focusing on and not having people think about it, they're just paid fairly, then we don't have to, it just helps kind of keep everybody focused.
I'm going to talk about go back to the financials, so I'm sorry. This is way more riveting than what I'm going to talk about. But and payroll is on there, so it's super important. And I think as you grow your business, these are things that you should think about. These are best practices, and they're financial best practices. I always tell my operators, you're very focused on SOPs, right? How to clean the dumpling machine, sorry, Irene, wherever you are out there, how to clean the fryer, how to clean the bathroom, right? How you're supposed to clean. So there's SOPs that you have, standard operating procedures. And you should have that in your financial world, right? And we talked about HR and operations playing nice in the sandbox. It's really important that your finance team plays nice with your operations team. Like, help me help you, right? And we see a lot. We see it, right? A lot of fighting between finance and operations. The finance team, all they're doing is really taking your information, the operations information, regurgitating in a format that's usable and readable for you to evaluate as operators, as the operations team, right? In just a nice little package. And so having financial controls, and when you're looking to grow your business and maybe getting somebody coming in, a gingerbread coming in and investing in your company, part of what they're looking for outside of a great brand, great food, great atmosphere, great hospitality, great management team, they also want to make sure that your back of the house, right, that I mentioned before, is taken care of, that you're thinking about these things, because all these things, there's risk associated with all of them. And if you if as you grow, that risk gets exponentially bigger. And I'm going to tell you like just a quick story. I go into companies and I look at their financial infrastructure. I look at their policies and procedures. I put in financial infrastructures, right? And I start with the operations team. What are they doing in the operations team? How does that flow to finance? How does finance flow back to them? And how do they all play nice in the sandbox? And how do they mitigate some of the risk associated with just daily business, right? Whether it be inventory, cash management, termination, payroll, whatever it is. And I had this company, they're 35 units right now. They started with, when I started with them, 2 units. I did this exercise. They had the mindset of we want to grow, we want to be better. And I was touring one of their restaurants, and we walked down into the basement. They had a basement. We walked down into it, and I saw this like a lockbox with just open with cash in it. I said, what is this? He said, oh, that's our petty cash fund. I said, your petty cash fund? What does it do? It's wide open. I could walk down here, take $100 from it. And he's like, this is our first store. He goes, everybody here has been with us. These are our core people. No one's taking this. No one's taking any money. I said, really? I said, so that girl over there, when her boyfriend has a gambling problem and he's about to be killed by the muscle man, you don't think she's taking that money out of desperation? She might pay you back eventually. And he's like, I never thought of that, right? And I said, well, now take that money that you have in there, which was about $3,000, right, at a time. I said, now multiply that by 50, because that's where you want me, right? And that becomes real money. So those are the things that I'm talking about, financial controls, right? Policies and procedures that which starts with operations, feeds up to finance, and then finance feeds it back down to operations. And we put them in different buckets, right? Revenues and cash receipts and accounts receivable, right? And that's really cash management, right? Properly closing out your, at the end of the night, closing the till, right? Counting the money, making sure the money gets, the cash gets in the bank. All those different policies and procedures, making sure things reconcile, right? Bank reconciliations, deposits reconcile, the POS reconciles, right? You deal with this. The POS reconciles with what's deposited into the bank account. So there's various policies and procedures, right? Restaurant cash controls. Procurement to pay, that's inventory and non-inventory, right? From when I order inventory, right? When I order the inventory to I get an invoice to I pay the invoice, right? How does that flow of information work, right? How does it get from the operations team to the finance team? How does that get paid? All those things, cash management, it goes back to cash management. What did we say? Cash is king. So credits, vendor credits, right? That's a nightmare. Right? A nightmare for all of you, right? So making sure vendor credits are properly handled. Who's keeping track of that, right? It's going back to sales, all this third-party delivery. Who's keeping track of chargebacks, right? Of commissions and things that are making sure. I had a company that nobody was, they really, during the pandemic, huge amount of third-party delivery. Nobody was keeping track of really the commissions and things of that nature, wasn't reconciling it on a weekly basis. They found out that the third-party deliverer was paying sales tax. Well, they were paying sales tax as well. They didn't know. They were just booking it to commissions. Right? They got the money back eventually, but it was a lot of money. $600,000 of a lot of money. It's a big company, but that's what happened there. So it was because they didn't have the proper controls in place from a financial perspective, right? So that's procurement to pay. Inventory management. We talked about inventory, a ton before, but I can't stress it enough. Policies and procedures around inventory. From ordering to counting inventory to segregation of duties, right? People that order should not be people who are receiving the inventory, right? Things of that nature that you don't think about. People who are taking inventory, blind inventories. I say that all the time. They should have a knowledge of the products, obviously, but the person who's ordering and maybe receiving should not be taking the inventory, right? That's just a candy shop. Like, let me take all the alcohol. Okay, payroll. Payroll, there's just a whole host of things of payroll. I've done, I talked about corporate overhead before. I've done very, very well-known large companies that you all know of. I've gone in and we've actually gone through with HR systems, payroll processes, right? From onboarding to pay rate changes to talking through issues that they might have, documentations, termination, payroll processing, how all the information, stopping with these emails. And these HR systems, they really, and a lot of your payroll companies have HR systems in place. So if you're using an ADP, if you're using a Paychex, a lot of the bigger payroll companies, if you're using them, they have these HR management tools already. I mean, it costs money, obviously, but it's money really well spent. You have to look at it as an investment. It's well spent money. And it's like workflows. They'll do the life cycle of an employee. They'll document the life cycle, because you don't have a choice in the matter. Like, to get to that next step, you have to go through that workflow, and it's documenting everything along the way. And then financial close and reporting. And that's really, when I talked about before, financial statements, right? Your balance sheet's wrong, that means your P&L is wrong, and then your view of your business is really wrong. So making sure that you are diligent, that your team, whoever your finance team is, they're diligent with closing the books on a timely basis, making sure that things are reconciled. A lot of times you have bookkeepers who said, oh, we'll reconcile that at the end of the year when we have to give it to your accountant for taxes. That doesn't fly. Cash should be reconciled on a weekly basis. Delivery charge, reconciled on a weekly basis. Payroll, weekly basis. There's most of the things in the restaurant industry, if you measure everything, it's weekly. You all have heard of like 52, 53 weeks, right? 445s, right? That you evaluate your business, because that's the way it should be evaluated for a restaurant. It's really, really important that these things are done on a weekly basis, because on a weekly basis you'll get a better indication of what's going on with your company, and you catch things. It's a lot of volume. You're dealing with a lot of none of this is rocket science, but you're dealing with a lot of transactions. So if you capture it on a weekly basis, it's not so overwhelming, and you're going to catch all the things, all the issues that you have, and all the mistakes that might be made, right? Because I'll tell you one thing, your bookkeepers or your finance team, when they don't have good communications with the operations team, and they don't know something, they just throw it on the balance sheet. We'll deal with it later. And then all of a sudden, they're not bonusing, but the rest of you might be bonusing maybe on a P&L, right? And there's an expectation, and you're doing it based upon the numbers that you think are good, and then all of a sudden, oh, by the way, your P&L is totally wrong, and we have to hit it for $50,000 because you had a bunch of stuff on your balance sheet that really should have been on your P&L, and your profitability isn't your profitability. So I can't stress more. Now, it's a lot here, but there's certain areas that you should definitely, anything with cash controls, anything with inventory management, and really from a payroll perspective, it's so important. I've seen companies just implode because of payroll issues, whether it be wage and hour, whether it be harassment. Yeah, I've seen. Yes, I've seen. I represent companies all over the country, and and it just pains me when I see that if the proper policies and procedures could have been put in place, a lot of this would have been mitigated. And speak to Sarah and speak to your attorneys. That's it. Okay.